All right, this is Chart Request Live. I'm Spencer Israel. That is Jason Purse from All Star Charts. And this is CRL, Jason's show where the people provide the requests and we provide the charts. Should we dance?
I'm ready. I love it. We did this last week. I got to come on with Alfonso. It was fun. Now I get to come on with you. This will be a good time. So let's do
Excellent.
it.
Always fun. As always, you know the rules by now. If you have a request, drop it in the chat. If you want us to do your request at the beginning of the show, email us. The email is in the description. It is questions at stockmarketmedia.com. If we could put that on the screen, that'd be cool. Let's start with the inbox and we'll start with AMPX, Amprius Technologies. This is a $700 million electrical equipment company. That is all that I know, which is probably more than you, but you don't need to know any more than that, do you?
I know nothing about this,
Yeah,
Spencer, of course.
right.
But also a macro guy. I'm always trading the futures markets. Sometimes stocks go a little bit beyond me at points. Don't know everything about them, but guess what? The price action works the same for just about everything. It's the reason why I'm a price action trader. It lets you trade everything. So this thing looks really interesting. So looking at here, we had a nice volatility squeeze. What we're seeing here is we see this range, and it's a big range. So basically, that was the last blow off top, happened, earlier this year. So big move, and then we just kind of consolidated. We got just lower highs, lower lows, over and over again until we just consolidated. So that means the volatility went out of it. Usually when that happens, that means this thing's ready for a big move. And so as we saw here, boom, big move right out of that consolidation zone, heading higher. A little bit of consolidation, but this thing looks good. I still think this thing looks like it's in pretty good uptrend. This is a daily chart, so the pullback looks a little bit bigger than it would be on a weekly. To me, it's still an uptrend. Do I want to buy dips here? I think that's what the question that usually comes up a lot. I don't know. I'm not a dip buyer. I'd rather have this thing on my radar, look for it when it breaks out of something like this. But if you're looking at something and you really do want to buy a mean reversion dip, and just something I know just from trading this and trading all these years and back testing so many things, if you're looking at stocks, they mean revert more than just about anything in the world. The reason why is that there's a lot of news for stocks, even individual names, even small names. If you're looking at commodities, you're looking at, some like obscure sugar market, they just trend. Do not try to buy dips in those. And here's a good way of illustrating that. The S&P 500, if you take a back test and you go, okay, if I buy after 4 days down the S&P 500, if I buy the 5th day, will I make money? And the answer is yes. Over 80% of the time, you will move up higher in the S&P 500. You want to do that same thing in oil. Okay, on the 4th day, I'm going to buy the bottom, try to buy it on the 5th day at the open, see how it goes. Most of the time, that's the beginning of a downtrend, and you're going to lose money. The probability of your win rate is about 20%. So once again, you want to do that in stocks. I think if you're looking at buying the dip, I don't think that's a bad idea. If you're looking at waiting until this thing hits a new high, I don't think that's a bad idea. You can look at that new high right here. That'd be at 891. That's where I would buy this thing if I was really interested in it. If we look long term, is there any resistance up there? Yeah, there's some resistance. Go to weekly. That looked a little bit more longer term than we needed. So, is there resistance? Yeah, so you could also wait till we get above this zone at 954. I think that's your safest bet if you really want to trade this thing. But also there's another thing, and it's the old school O'Neill method, which is waiting till you get out of those IPO highs. So right after the IPO, we went up here, we moved to that high. That was at 1280, 1287. So if we get above that zone, I think that's clear skies ahead. But if you want to buy it a little bit earlier, you can buy it above this high. Or if you're just looking for it to move up and back to those old highs, you could probably buy it right now.
All right. Well, speaking of IPOs, we did have a request to look at Figma, FIG. The stock has a whopping 2.5 days worth of data to look at. Yeah.
Oh, so we're definitely not looking at them.
It doesn't have a weekly chart yet.
Let's go 15 minutes.
Yeah, 15-minute chart. So there's really not much to go off here from a technical perspective. I don't know what you can say other than the fact that the opening price was 90 and the IPO price was 33. And right now we're at what? 94, right? So
Yeah.
those are your levels of interest. There's not much more to it than that, right?
Yeah, and I mean, once again, it's like, is there enough price action to say, hey, you could buy it here and this is support? No, like I wouldn't touch it and say this is support. So basically for me, this is a big nothing burger. Now,
Mhm.
once again, I know people will look at this and go, if you really like the company and you like the fundamentals and all these things, go ahead. But I will say the one thing that I've seen many people get killed on is buying IPO stocks right after they IPO.
Yep.
Give it time, see how it shakes out. Can we get back above these IPO highs? That would say something. If you really, really like the company, go ahead, but I wouldn't put much into it. It'd be like a 1% of your portfolio. When I used to manage people's portfolios, we'd talk about like this is back when, Bitcoin's brand new and, you're talking to somebody who's like 65, 70 and they want to put some money into Bitcoin. And you would say, yeah, you could do that. But they're like, well, I got fixed income. Well, I'm like, well, take 1% of your portfolio, put it in it.
Yeah.
And you could do something like that. So that's all I would do here. Small position or no position at all.
There's ample research out there that shows if you just wait 6 months after an IPO, you are almost certain to be able to buy it at a lower price. If you just wait, most IPOs go down and then eventually retest their opening levels. And if you buy it after that retest, you can be in better shape. But buying it right off the bat, more often than not, is not the best way to do this. So
No, I absolutely agree. I think that's spot on. And I think one thing that I want to add to that is just if anybody has any questions about what Spencer just said, just go look at some IPOs. Go look at like 10 IPOs that have happened over the last 10 years, and you're going to figure out that Spencer is exactly right about what he just
book
said.
I'm referring to is called The Life Cycle Trade. But guys have good research on this. Okay, let's talk about the only light day in the inbox. Only one more request. If you have any requests in chat, drop them in there. Let's look at MicroStrategy, MSTR. This has been really quiet the last few months. Jason, the stock was like the epitome of like YOLO for a while there.
Yeah.
And I think people own this because they want the juice. And if you own this for the juice, you have been severely disappointed the last few months because it has done a whole lot of basically nothing.
An anti-juice.
Anti-juice going back to what, May, April, Liberation Day? I mean, anti-juice.
I mean, when I look at things like this, one, you got to understand what MicroStrategy is. It's a leverage bet on Bitcoin in a way.
Right.
And so nothing wrong with that. But you're going to have periods of time where it's very correlated to what Bitcoin's doing. If Bitcoin's moving sideways, you're going to see it move sideways. I think this thing could absolutely probably move. And it's not because I'm like the company or the fundamentals or anything behind it. I just think when people get excited about Bitcoin, I think right now is a pretty good time to do so, is this thing's going to move and it will probably outperform it at some point. Now, do I want to buy it? No, I'd rather own something like Bitcoin, some of the other names in it. Louis puts out great research on the crypto community all the time, what we want to be buying, what we want to be investing in. He's a smarter mind than me on the space, but I always kind of buy the majors. I look at Ethereum, I look at Bitcoin and some of the others to just understand where I want to be. And then something like this is something that's a very leveraged bet. If you're very bullish on Bitcoin, you're very bullish on this company for some reason, this is a good time to possibly think about it. But I would just sit on my hands here. A lot of people, I know people want to kind of get into it. They want this thing to break out, or they want to just buy it low, or they want to buy it while it's consolidating. Like, this is why we always say don't buy things while it's consolidating. The reason is that you're going to get shaken out up and down and up and down. So you're just getting shaken around. By the time you get to the breakout, you might have sold your position already because you're just frustrated with it. But if you wait for the breakout, you have a clear level to just get into this thing, and then it's going to be trending. So once again, I think it's a good time to just sit on your hands. 454 is a good point to buy this thing, and then it could really take off. So right now I would do nothing. I would wait till it breaks over 454.60. I would buy it and see where it really ends up. I guess the weekly closing high, that'd be a daily close, but the weekly closing high is at 443. 443, we get a close over that on a weekly basis, on a weekly chart. I'd say this thing could take off. I definitely think that the whole sector will move. I don't think this is a situation where people are gonna, go, oh, well, MicroStrategy, I really don't want it right now. Oh, I don't want to buy this one. I think all of these things are going to move, and this thing is going to move with it. It just isn't going to move like it used to be. I think so many people are looking for these wild moves to happen in this thing again. I just don't think it's going to move like that. I think there's some better names out there these days.
Jason, I feel like you spoke to my soul there with the idea of buying during a period of consolidation, because it sounds like a good idea in theory. Oh, I'll just buy it now before the breakout, and I'll set a stop loss at 10% or 15 or maybe 20% to really give it some room. And it sounds like a good idea in theory, but like you said, you get shaken out, and you end up waiting. You can wait months, longer, quarters even, for that breakout to actually happen. And all the while, the opportunity cost, your money is locked up, and you're waiting, and then eventually you get shaken out, and that's when things go. So it sounds like a good idea, but why not just wait for the breakout, right?
It's hard to sit on your hands as a trader. It's hard. It's so hard. It's the hardest thing to learn, and it's something, I talk about it today, and like I sound like I'm just so good at this, but like only reason why I say these things is because I was the worst trader at the beginning. I did every single possible thing wrong. I lost money in every way you could possibly do it. And just like my rule book, and randomly, like, I have a post-it note on my wall, so like I just get to see these random rules every day, like don't do this, don't do this, don't do this, and that kind of helps me to not make decisions like that. So I think generally, like, that's something that like we all do, because like something that's important to think about: new traders, what do? Well, they get more excited as this thing's moving down. So if we're looking at this chart and we're going, okay, well, it's at, let's say, $50, and it's moving down, now it's 40, now it's 30. New traders get really excited. They go, okay, let's keep buying this thing, it's getting cheaper and cheaper. A professional trader will go, oh my gosh, this market's not proving my thesis right, this is going against me, I need to be out of this thing. But a trader who's when it's moving up and you're a new trader, you're going, oh, I got to get out, like I made some money, I need to get out of this thing immediately. Where an experienced trader is going to go, oh, I'm getting more optimistic as this thing's moving up. So now I'm more optimistic. I'm ready to, possibly add to my position. I'm going to hold on to this trend. I'm going to move my stop loss wide or something. Yeah. That's the thing that you want to do differently. And so those consolidation periods are like something to stay away from, something simple to write on your wall so you can look at every day and just go, man, I'm going to just let that go and move on.
And like JC always says, it also depends on your time horizon. The longer the horizon, the more, room you have to play with in theory, and the more time you have to make it up. But that's also part of this. So let's go to the chat now. A couple questions that here's a few that you'll like here, Jason. Ryan is asking about wheat and UUUU. So we'll start with wheat. This is pretty obvious. This is the wheat ETF.
Wheat ETF. Okay.
He's looking for long-term, either January 26 or January 27 leaps. So going way out here on this one. This is your neck of the woods here. I mean, the instrument might not be, but the market is. So
no, for sure.
So talk to us.
Yeah. So when we're looking at wheat, this is a tough one, and it's been a tough one for me for probably 2 years, because every signal has been a false signal. Over and over again. The ETFs, now just something to know about the ETFs, they roll contracts inside the ETFs. And what that means is, in the futures market, when you roll to the next month, you're paying that premium to roll it to the next month. That's why you'll see a lot of disparity in things like natural gas or oil ETFs, and the downtrend will look a little bit more violent. If we look at ZW, which is the futures contract, I think it's ZW1 in here. So we look at the futures contract, you're going to see like there's not as many, we're not hitting new lows over and over again. We're not in a complete downtrend, but either way, same story, just been frustrating, not fun to trade. So why I bring that up is when you're looking at these things, man, sorry guys, I have the number 1 in front of everything over here because it's on the screen. Yeah. But so when we're looking at this downtrend here, I don't want to buy it. I don't really want to even think about it right now. Like if you're looking at it and you're going, okay, this is a falling wedge. This is something that traders get into too much, where they go, okay, this is a falling wedge, meaning we see the volatility squeezing as we're moving lower. So here, basically, I'll draw a quick falling wedge to give everybody an example of what I'm talking about here. So the volatility is squeezing as we're moving lower quickly to the downside. And everybody goes, if you technical analysis school 101, falling wedges lead to trend reversals. It can happen. However, it's not a high probability bet. You're not running, that trade is not going to go in your favor about 90% of the time. Most of the time, it's not going to run in your favor. Maybe you'll see a higher low, maybe you'll see something, but it's not something where you just want to buy it at the bottom and just let it trend up and think it's going to end up back here. Wait for the trend to actually change and then buy them. So basically, to me, what I'm looking at here, you look at Brazil, you're seeing weather things. You're looking at the global geopolitical spectrum, and you're going, oh my gosh, there's all these things that basically wheat should go a lot higher because of this export and dry bulk shipping. And I mean, you could go down the entire list. And trust me, like, I've done it myself. Last year I was like, there's a million reasons to be bullish on wheat. However, what happened? The grains went nowhere. Corn went nowhere. Soybeans went nowhere. And part of the reason is if you look at meat prices, so if you're looking at cattle prices, I won't jump to that chart. I'll just cover this real fast. But if you're looking at cattle prices and so on, like, they're sky high. Like, and let's just talk about it in a way that everybody understands. Go to the grocery store, buy a steak. Tell me how much it is. Like, at this point, I'm like, man, should I just order this on Uber Eats to just have it heated up and sent to me, or should I go to the store? Because I'm talking like, in Ohio, it's like $13 to buy a decent steak. That's pretty crazy. And then if you want to feed your family steaks, you're looking at $30, $40 even. So what happens is, and the reason there's entire funds that used to be built based on this one correlation, meaning cattle moves up in price, corn moves down in price. This is a correlation that is pretty common because that's feed for cattle. Same with soybean meal. And then vice versa. When cattle's moving down in price, we'll see the grains moving up in price. Wheat is also a part of that. So as long as there's that much pressure on the wheat market, the corn market, the soybean market, because of cattle, because of pork prices, any meat prices, I mean, bison prices are insane. Whatever you want to buy, I've been looking around trying to figure out, because I'm like, this is crazy. I'm actually working with farmers now to just get like another half a cow and just be done with it, because it's too crazy. So as long as that's putting that much pressure on the grain markets, I don't want to touch it. I just want to wait on it, see when that actually changes. Because if you look at feeder cattle, you look at live cattle, you're seeing that just heading the wrong direction. So Energy Fuels, this is a uranium company. I haven't looked at this company in years, probably why the the line is so off at the moment. So I haven't looked at this company in a long time. This is a good one though. This is one that like it's always good to have in your portfolio. I think it's a US based company. It's a big supplier. They actually own a lot of uranium. They own it in the futures market. They own different mines and so on. This is one that could make you a lot of money very quickly. Now it's already had a huge move. And so now I'm assuming, what we're kind of talking about here is, are we going to get that new breakout? Now, this is an extended move already. So I'll just explain like how I talk about breakouts. How I teach people breakouts is there's three different types of breakout. There's a grade A, B, and C. A grade A breakout is something that consolidates in a very tight zone, like something like this, and then breaks out of it. That's a grade A breakout. A grade B breakout is something that starts to be in kind of a bigger zone, chopping around, and then we finally get a breakout. So let's say this right here, we break out here. It usually doesn't go very far, but it's usually a little higher probability win rate. And then this one's a grade C. And how I grade C one, and the way to think about this is, if you're on a football field and you have a wall at the end of that field, if you start 10 feet from the wall, you could probably hit that wall pretty hard. But if you start at the other end of the football field and you're just running as fast as you can until you hit that wall, you're probably going to get it depends on what type of shape you're in. But most people, we're going to get kind of tired. And by the time we hit that wall, we're not going to hit it that hard. And so this is kind of that point where like we're have this huge move. We've hit the wall. We're not hitting it that hard. We're actually bouncing back off of it. So I think now would be a good time. Like, what I'd like to see for it to move higher, consolidation. If this thing consolidates and then we finally get above these levels, then I would buy it. But if this thing just continues to move up, I think it's just going to go right back down very quickly. Or if it just goes back down to the bottom of the range, I wouldn't buy uranium miners on a mean reversion pullback either. I think that's a way to lose money as well. Same thing like I talked about with oil earlier. When you buy commodity stocks on mean reversion trades, they'd have a tendency of just moving lower pretty quickly.
All right, let's do a couple more. I did actually miss one in the inbox. Thank you for the reminder, Wavy. You emailed us last week about ITRI. Wavy's looking at a massive base breakout. He loves his base breakouts. ITRI. I don't know anything about this one, but again, we don't care about that. So
Yeah, it doesn't matter. Like that's a thing. Like I always talk to people about price action trading. I'm just like, like if you're a real price action trader, you just don't care. It doesn't matter because guess what? The narrative most of the time is going to just get you out of the trade or doing something stupid. So looking at this one, we're seeing nice. This is a big base. We are seeing that this thing could break out into space. So good one, Wavy. So I think this one's a really good one to look at, something to just keep an eye on. And right now, honestly, it's just buyable at the moment. Some people will look at it on a daily chart or candlesticks and go, okay, well, the candlesticks are telling me something different. So, but actually at the same time, the candlesticks are telling you the same exact story here. So I would say it's a buy any way you want to look at it. I think this is a good trade, good setup. And this thing could probably go a lot higher. And if we just kind of measure the move, so this is old school stuff. You basically measure the move and go, okay, this is the move that ended up in the consolidation. We're seeing that's a 2,000% move. You'd basically be able to go on the top of here. I can't even draw that high on this chart because that would be astronomical at this moment. But you're looking at something like, this thing hitting 1,000 probably pretty easily. If you're looking long term, now once again, it's a long term chart. This is monthly. We're looking at a very long term time frame. This is over like possibly 5 years. If we look at this move, it happened looking like 2001 all the way till 2008. So, you're looking at a 7-year move. This thing could move with another 1,000%. It could be a 10xer. I wouldn't bet against it. So I definitely like this chart. Thanks for bringing this, Wavy.
Okay, back to the chat. Abe is asking about apps, APPS. So this is his COVID bag that he couldn't get rid of. This is Digital Turbine. I identify with the COVID bags. We all have them. Oh, maybe not Jason. I had more than a few COVID bags back in the day. Anyway, the question is
like stocks you can't get rid of, or
the question. Well, at this point they're all gone. But at this point, the question is, do you think it keeps working its way back? Because looks like Abe is, like I said, holding it back from COVID. So.
Yeah, I have no reason to believe that this thing's done. I like that the fact that it's above those COVID lows. We had the COVID low right there where it rallied off of. We're above that zone at the moment. So let's see where we're at. So yeah, that's the COVID lows. I mean, it's kind of funny to think how crazy the COVID time was, and then you look back at some of these charts and you're like, man, that was the pullback.
Yeah, I know.
I mean, it's pretty big. I'm assuming that might be almost 50%, or
it seemed 40%. Big at the time.
Seemed big at the time, but then like the rally off of it was much bigger. So looking at this one, we're seeing a 373. We're above that level. To me, as long as we're above that level, I'd be bullish on it. Obviously, there's a little bit of resistance right here. So as we're seeing that resistance, I'm assuming that this thing could slow down, around this zone. So you're basically looking at major resistance anywhere from, $6 all the way to $7. So there's going to be some resistance there, but really there's not much after that. Yes, you're going to have some volatility. This is more of a long-term chart. I'm looking at it on a weekly time frame. So looking at it to get back up to those old highs, above, around 100. Was that around 100? That's a big move. So yeah, we're looking at those old highs around 90. So I mean, this thing could make a very big move very quickly. So I definitely like the way this chart looks. Would I buy it today? If you're already in the trade, great, hold it. But would I buy it today? No, I would wait there for this thing to get above those highs. If we get above those highs around 620, 627, 630, I would say this thing's probably headed a lot higher.
Okay, let's do a couple more and then we'll hop out of here. The requests are flying now in chat.
Nice.
CPER. Let's take a look at
that's the one we want to talk. Let's do this.
The copper one, right?
Yeah, I want to do this. This is fun. So I'm glad somebody brought this up. This is the copper ETF. I don't usually look at this one. I usually look at the copper futures, which is HG. But looking at this chart, it basically had the breakout. And so I talked about this more in depth with the subscribers today for Gold Rush. So if you are a subscriber, wait for that. You're going to get a really good information, really in depth. But just real quick, we break out on news. I talk about this all the time. When I see news breakouts, I don't think they're always a great time to buy something. You look at oil this year, it just had one huge news breakout. Oh my gosh, oil started again. It's going to head to 100. All the analysts come out and they say it's $100 oil's right around the corner. Next thing you know, it comes right back down. Very normal for a news breakout. And then if we look at this, we had the Trump news, tariff news. Oh, boom, it went up. And then we had Fed Day, and then more tariff news about copper. Right, somehow it was released right around the same time as the Fed meeting. So that was very interesting. So then it came all the way back down very quickly. To me, I'm not that worried about it as long as we hold this level. A lot of people are going to ask right now the same thing, which is, can we buy copper here? And the answer is, I wouldn't touch it. And it's the same thing we talked about earlier. You're looking at commodities. You don't want to buy the dips in commodities. You want to buy the breakouts. Some breakouts don't work. Guess what? You buy it over 5. You put a stop on 5 on HG. So basically 30.50 here or 31 here. So you buy it above that level. You put a trailing stop. Oh no, it happened. You got hit. It's going to happen to you. It's going to happen to every single person who trades. But make sure you're risk managing well. Make sure your position sizing is correct. 2% of your portfolio is all you should lose on a losing trade at most, possibly 3%. 5% is even kind of excessive, but that's something that you can do if you're on a smaller size portfolio. But I think that this is just, hey, let's hold this level. If we hold this level, that's significant. What that means is that we're probably going to head higher in copper, that yields could possibly hold up here and move higher in the long end, possibly not the short end of the curve where the Fed controls, but in the long end of the curve, possibly. And then also the international trade is probably intact still, meaning all these international stocks that we've seen moving up higher very quickly. I think China, all these things are probably intact if copper can hold this level. If copper starts breaking down on HG, which is the copper futures, if it breaks down below 425, that's when I'm going to get bearish on all those trades. That's when I'm going to start saying, okay, I don't think we're in a reflationary style environment. I think yields are possibly headed lower, and we could possibly be headed into disinflation. At the moment, I don't think that. I think that copper will probably hold here. I think this was very news driven. I think that copper was in an uptrend before any of the news came out either direction. I think it will go right back into that uptrend. But you need to give it time here, and also just be open to it going either way, because guess what? It's markets. Markets like to make a fool out of all of us at all times. And so if this thing breaks down, I'm going to be open to, hey, this is a different style of market. If this thing breaks out, I'm going to think this is another style of a market. And this is a market that I've been thinking of, which is commodities are going to start rolling once again. And I do think that's going to happen sometime soon.
All right, let's do one more, Jason, and then
Let's
we'll
do
head out of here. The requests are flying. Alexander, you dropped in a few. Let's look at Generac, GNRC. We are coming up into hurricane season in about a month. Jason, right? Doesn't hurricane season go from August to... Wait, it is August.
It is. We are in hurricane season.
So, yeah, it goes from August to October, right? Isn't
Yep.
that hurricane season?
We just got there.
Get your generators out, everybody. GNRC, what does this look like to you?
Do you know it's an interesting point, though, that tornadoes mainly happen in the United States, and that's just about it?
I didn't know that.
Yeah, I didn't know that until recently. Yeah, it was talking to a farmer. He was talking about it. I was like, oh, that's interesting. Then I started to look into it, and I was like, yeah, that's a real thing because of something to do with the way where our country is and compared to water, ocean, and so on. So we are kind of the only ones that have a ton of tornadoes. So
Interesting.
let's look at this one. So what are we seeing here? What is this company? Do you know, Spencer? Does anybody know?
Yeah, they make generators.
They make generators.
Yeah,
That's why you said the generator thing.
Gotta have it.
Got it. Yeah, I fully believe in having a generator. I think it's wild, especially like I always order like if I'm ordering meat, it's in bulk, so I always have freezers in the garage. You can't go without a generator. Just the other night we had everything go out in the house overnight for all night. Very important. Would have lost all the food right there. So yeah, looking at this one, this thing is kind of in a nice consolidation pattern. It's breaking out of that recently. So, and this is kind of and we talk about this a lot at All Star Charts. This is a pattern that we've been buying this whole cycle, meaning from the 2022 bear market. So 2022, we had that bear market. It bottomed out for the entire market in, that would have been October 2022. And then we gone sideways, and some of them went sideways. Like if you're looking at technology, they went sideways for a little bit. And then by January 2023, it was breaking out to the upside. And then we had other ones that just kind of continued to move sideways for a little bit longer. And then we bought those when those broke out. Most of those were great trades too. Now we're seeing this thing, and now we're seeing it move sideways. It did make a new high here. Couldn't get back above that, broke down a little bit. Now we're going back and we're making another new high, new breakout, another new 52-week high. This thing's very viable. This thing's very viable. So if you are interested in this company, you like this company, I think this one's a good one to own. I actually really like, this is probably the chart of the day for me. If I look at this, I'm thinking like, okay, well, this thing's been in massive uptrends over the time. Definitely like generators. Don't know a ton about, I've never invested in a generator company, but I'm kind of like, hey, you know, maybe this is one I might want to look at. This is great. So thanks for whoever put this in the chat. Shout out to you. This is definitely my favorite chart of today.
Look at that. See, that last one is the winner. All right. Let's wrap it up here. Jason Perez, everyone. All-Star Charts Research. Great stuff. We'll be back next Monday. If you have a request and you want us to get it in, email us questions@stockmarketmedia.com. Like I said, we do all the requests from the inbox first, then we get to the chat. Appreciate you guys in the chat as always, the participation. We love doing this for you, and that's why we do it. So, Jason, great stuff, and keep on keeping on, man.
Thanks, man. It's fun hanging out with you, Spencer. I've been having fun. Sam's been gone, so I can just wild out. You know, like I've been gold rush by myself. Who knows how crazy that one's gotten.
Jason takeover.
Oh, yeah. So, but Sam's back next week, or this week actually. He'll be back on Gold Rush Live. And for you guys that watch Gold Rush Live, Josh Young will be on this week. If you guys know who Josh Young is, he's a really good energy investor, one of the best names, one of the best minds in energy. So I'm really excited to have him on, and we'll see you guys soon. And if you didn't see one from last week was really good. Yeah, Michelle Schneider last week was amazing. Yes. She's always phenomenal, but this was really good.
If you go to our YouTube channel, the video from last Thursday the title is "The U.S. is already in stagflation." That was great stuff, Jason. I meant to tell you that, but I forgot. But
thank you.
Very good video. Yep.
And it's not even me. She's just always so good. She's always so good. Love having her on. We'll have her on again. I know so many people asked immediately, like, can we have her on again? I'm like, absolutely. So we'll do that soon.
All right. Thanks a lot, guys.
All right. See you guys later.